Are you struggling to stay updated on the rapidly changing financial world?
With insights from seasoned analysts like Danielle DiMartino Booth and Lynn Alden, we've condensed hours of expert analysis into concise, AI-driven summaries that save you valuable time.
Discover how to navigate tumultuous markets and make informed investment decisions as we unveil critical predictions on gold prices, the impact of the Federal Reserve, and potential economic shifts.
Don't miss out on strategic insights that can reshape your financial future.
Today, we explore recent market turbulence through insights from Danielle DiMartino Booth, who discusses the implications of the Federal Reserve's recent policies.
Danielle highlights the investor mood, noting the increasing caution as the market reacts to banking uncertainties and leadership at the Federal Reserve.
Danielle emphasizes that the market's cautious reaction reflects fears associated with the Federal Reserve's current monetary policy.
David Lynn agrees, suggesting that the outlook appears challenging, with rising interest rates likely to affect economic growth. Danielle notes that each announcement from the Federal Reserve is closely analyzed, contributing to erratic market reactions.
Precisely, and she stresses that understanding historical trends can help anticipate market movements. Danielle mentions that more investors are holding cash as a strategy against mounting volatility.
This trend could create challenges for overall market liquidity, as David Lynn points out.
What trajectory is Danielle predicting for the market?
She expects a prolonged downturn, potentially extending significantly into the year.
Danielle concludes that while market conditions remain difficult, a clear understanding of the Federal Reserve's actions is essential.
Indeed, both analysts highlight the need for strategic planning in turbulent times to navigate uncertainties.
Today, we're discussing Donald Trump's recent remarks and their potential implications for the Federal Reserve with our market expert.
The guest highlights how Trump's statements could shift the landscape in the precious metals and cryptocurrency markets.
The guest explains how Trump's comments raise concerns regarding the Federal Reserve's independence.
This reflects broader market anxieties about monetary policy implications.
How does the guest evaluate the market's response for gold and silver?
The analyst reports a notable drop in gold following Trump's comments, indicating investor uncertainty.
And regarding silver?
Silver saw similar fluctuations, reflecting the market's volatility as participants reassess their approaches.
What predictions does the guest make for Bitcoin, given Trump's statements?
The market analyst believes Bitcoin may encounter significant downward pressure as sentiment shifts due to regulatory concerns related to Trump's comments.
In conclusion, the guest emphasizes a cautious approach to navigating current market uncertainty.
Investors should closely monitor economic developments and consider portfolio adjustments, especially regarding Trump's impact on federal policies.
In today's discussion, we delve into the intriguing remarks by Frank Giustra regarding the gold flows and audits associated with Fort Knox.
Giustra highlights serious concerns about the transparency of gold reserves and the potential implications for U.S. monetary policy.
Frank Giustra raises alarms over the credibility of the gold reserves listed at Fort Knox.
According to Giustra, the official figures may not represent the true state of U.S. gold holdings, potentially diminishing public confidence.
How does Frank Giustra describe the hidden gold flows affecting the market?
Giustra points out that large transactions of gold often slip under the radar, creating uncertainty in pricing and trust.
So, what does this mean for gold investors?
Giustra emphasizes that without clear accounting practices, investors face risks in their gold portfolios.
What predictions does Giustra offer regarding audits of U.S. gold reserves?
Giustra foresees that pressure may mount for comprehensive audits, possibly revealing discrepancies in reported gold reserves.
Frank Giustra concludes by urging that we must foster a culture of transparency regarding gold reserves.
This clarity is vital for maintaining investor confidence and the integrity of the financial system.
Ultimately, Giustra's insights call for a collective push towards accountability in gold reporting. Welcome to our discussion on the future of gold pricing, featuring insights from Lynn Alden.
Lynn will elaborate on inflationary pressures and their significance for gold prices.
Lynn Alden emphasizes that sustained inflation may enhance gold's investment allure.
David Lynn discusses how market uncertainties are pushing investors toward gold.
Lynn Alden notes gold's historical responsiveness to high inflation,
This trend positions gold as a preferred asset for investors.
David Lynn describes a cautious market sentiment favoring gold.
Alden agrees, noting price surges during periods of economic uncertainty.
What does Alden foresee for gold prices amid persistent inflation?
Lynn predicts possible stabilization or rise in gold prices under ongoing inflation.
How could central bank decisions sway gold prices?
Lynn points out that changes in monetary policy could significantly alter gold's course.
Alden advises investors to monitor inflation trends closely.
David Lynn reinforces the need for diversification, positioning gold in a broader investment portfolio.
Today, we're analyzing insights from Dr. James Williams on recent trends in credit markets.
Dr. Williams sheds light on the implications of ongoing changes for the stability of the financial system and investor sentiment.
Dr. Williams asserts that shifts in credit dynamics could indicate underlying vulnerabilities in financial structures.
He suggests that these recent developments should not be viewed as isolated, but rather as part of broader market trends. According to Dr. Williams, fluctuations in credit markets can signal concerns across the financial system.
This shift in confidence can restrain credit availability, affecting both businesses and consumers. What insights does Dr. Williams provide about market responses to credit shifts?
He points out that markets often react strongly to credit information, which can lead to notable declines in risky assets.
What are Dr. Williams' predictions for the future of credit markets?
He predicts tighter oversight of financial practices and potential regulatory shifts as a result of current credit dynamics.
Dr. Williams concludes that investors must adopt proactive strategies amidst changing credit conditions.
This involves diversifying portfolios and being vigilant about indicators of financial health.
Today, we're examining the substantial warning from the Atlanta Federal Reserve regarding the United States economy and its implications for the housing market.
The Atlanta Federal Reserve's analysis indicates increased risks due to inflation and rising interest rates.
The Atlanta Federal Reserve emphasizes that ongoing inflation may significantly affect consumer purchasing power.
This scenario might lead to a sharp decline in home affordability, making it difficult for many potential buyers. As discussed, high inflation remains a critical concern, and if it continues unchecked, we could see a slowdown in economic growth.
Indeed, inflation's influence on consumer behavior can lead to significant shifts in the housing market. Rising interest rates are a key factor deterring potential homebuyers.
According to the Atlanta Federal Reserve, many are choosing to wait instead of purchasing homes in this environment.
What does the Atlanta Federal Reserve predict for the housing market?
The outlook suggests that home prices could stagnate or even decline.
In conclusion, potential buyers should carefully reassess their financial situations before making any decisions in this market.
Exercising caution and being well-informed is essential, especially with the current economic signals.
Wow, what a wealth of information we've gleaned today.
Right? Each expert brought unique perspectives, making for a captivating discussion.
Absolutely. It's particularly striking how they all agree that inflation is a considerable risk that needs to be managed carefully.
Yes, yet they diverge on crucial predictions about the future. For instance, Dr. Williams underscored credit market risks, while Alden took a different angle on inflation's impact.
And we can't overlook Frank Giustra's insights on the troubling lack of transparency around gold reserves. It's critical.
It truly adds depth to our understanding of market dynamics right now.
If our viewers found these discussions enlightening, they should definitely hit that like button and subscribe.
Your support helps us gather more insights from top-notch experts and keep you informed.
And we'll see you in our next video, where we'll dissect global trade dynamics and their profound impacts on financial markets.
You won't want to miss it. Stay engaged and keep learning.